Thankful to have you here. And today we have got the panel of the best agents in Alabama, in New York, and in Virginia, talking about is now the right time to buy a house. So there's a lot of debate with the interest rates, obviously have gone up tremendously, and home prices, what are they doing? And is now a good time. So welcome and thank you for being here.
Thank you, Jennifer. We love
Thank
being
you,
on your show.
My show. I love my show. Yes, I love y'all being here too. So what overall are you seeing right now in your particular industry as far as prices, and what are your clients saying? We'll start with you, Shelby.
Okay.
Sorry, I'm going around the circle.
So it's also a time of year where, we see a little bit of change up anyway, thanks to the holidays. We're seeing our lower price range is still just flying off the shelf. Lots of buyers, lots of multiple offers still selling in just a few days, maybe a week. The middle range, I think Jason and Ricky touched on this with you a couple of weeks ago, somewhere between, for us, it's around 300 to 500. It's kind of slowing down just a little bit, and still plenty of activity, still things are moving. And then anything above that, I think is a little bit different ball game in and of itself, because of it being a little bit more luxury where we are anyway. There's still a lot of cash in that environment, so still a lot of things taking place there.
Oh, very good. So what are you seeing, Sia?
Well, right now we're seeing, I think it's a time of year also. Hi guys, could you hear me good? The time of year usually does slow down a little bit. Last year was, not normal circumstance. So right now we're seeing a lot more sellers being a lot more reasonable, right? Yeah. The buyers are still out there. The luxury market, even here, it has been affected. If any low priced home is going to be the days of the market, I can't even believe. We went from like average days of the market, 85 days, 100 days, down to like 55.
Oh, wow.
So for us, that's really, we are a contract state with the lawyers. So I couldn't believe that stat. And this has only happened in the third quarter.
Wow.
Yeah. So the inventory is so low because a lot of the sellers are waiting because they're like, okay, so I have to go pay more money in Alabama now. So they're willing to wait a little bit to put their houses on the market in Brooklyn.
Very good.
That's what I'm finding here.
Yeah. So what about you, Virginia? So I got to say, Jessica in Virginia, what are you seeing?
I'm seeing the same thing. It's slowed down quite a bit here. So kind of regardless of what the price point is, I think homes are flying with maybe 2 or 3 offers if they're in a very desirable school district and if the homes are priced very aggressively. So in my market, I'm seeing a lot of agents, myself included, who are pricing things very, very well, like a little below where the other comps are, so that they are moving. But then there are the sellers who, Sia, you had said your sellers are more reasonable. I would not say that about my market. There are some sellers who are just holding on to those comps from 4 to 6 months ago that are higher and trying to get that price, but the rates have gone up. And so that those homes are going to sit because they're just not priced appropriately. Yeah. And then, just on top of that, the interest rates have been a little bit wonky. They were like 7, and now they're kind of in the low 6s. So that's also helped a little bit in October from September here.
Absolutely. So with us, typically, I tell everybody from Thanksgiving to Christmas, it's pretty much dead. We'll have to close, and people that are looking during the holidays are highly motivated, whether they're trying to sell or buy. They're in here to come in to do it. But man, I worked my butt off the past week. I've had 6 different buyers in town. I think we are, and I think, part of it's location, right? So being close to the beach, our prices have gone up tremendously, but nationwide, they're still pretty low. And our taxes, I have got everybody came in from New York, actually, Sia. And it was because the prices, taxes are so much cheaper here than they are in New York. So it's still driving people. But you mentioned, I'm going to see if I can share this screen with you. So I'm going to give me 1 second. But we were talking about interest rates, and interest rates have doubled this year. So what are you telling your buyers when they mention this interest rates, as far as now the time to buy?
I'm telling them to shop around more than they would have in the past. I think we used to just recently, it's just you call your lender and you get signed up, and now it's like, okay, well, let's talk about with us and between you and your lender, what is right for you? How long are you staying in this house? Should you look at a different loan type? I remember when I bought my second home, technically, I did a 5-1 ARM. I hadn't planned on staying there more than 4 years. And I figured if I did, I'd refinance at that time, so you see, be a little more creative, I feel like, if that's important to you. We've had lenders that are getting really creative. One in particular right now, she got really attached to the marry the house, date the rate concept. And they actually got together and they have a program where, you do get the typical interest rate right now, but they'll let you do within the next 3 years, they're going to let you refinance without charging a fee. And one time when the rates go down. And of course, that's going to be up to you. And you'll just be like watching the rates, wondering when your special time is, and hoping you guess right. And I think it gives people a little bit more of an opportunity to go ahead and buy without being so afraid of being locked in for so long, and without having that big refi fee that a lot of people would be afraid of.
That's exactly right. What are you seeing, Sia?
The same thing here, a lot of concerns, and I think it's the gloom and doom they hear, everybody's talking about this gloom and doom. So I tell them to slow down, because I don't know if you guys know how much rentals cost here. For like a 1-bedroom, you're paying $2,000 a month at a minimum. So there's cheaper places, but the proximity to the city is even further. So we basically tell them right now, a lot of the lenders are coming up with a lot of programs, like Shelby was saying, take it for now. Maybe you qualify for things that you didn't qualify before. The lenders are coming out with a million things that you might be able to get. And then in a few months, you could refinance, as long as you're not looking to sell quick. And that's what I tell them. Like, our equity in this city, if you hold on to property, it's 100% worth it to buy. Because right now you're able to buy. How do you know in a year you'll be able to buy? How do you know it's not going to go up? How do you know the interest? So if you're able to buy today and your circumstances you have, and I'm very honest, I try to explain to them, every cost associated with the home ownership, and I deal with residential mostly. So I have a heart to heart with them and explain to them what it's about. And usually, the interest rate is not going to stop somebody that's really ready to buy, especially right now during the holidays. Like, nobody's looking for a home unless they're really serious.
That's right.
I mean, do you guys agree? There's pointless,
Right. And what are you seeing, Jessica? Anybody with the interest rates, or what are you telling your buyers?
I'm seeing the same thing, and same with Shelby. I'm having people shop around a little bit more. There are a lot of different lenders have different programs. I have one lender that's got this grant program, another one that has the free refinance program. So just kind of looking at that. And then again, seeing what their monthly payment would be for rent versus buying and what makes sense for them. So I don't think now's a bad time to buy. It is less competitive, obviously. So sellers can give more concessions in some cases. In our market, we're seeing a lot of 3% subsidy requests from buyers. And then I'm telling a lot of people to hold on to that and use that money sometimes to maybe refinance in lieu of maybe buying down the rate. So that's what I've been telling people lately.
Well, no, I agree with you. And everything that I have been studying and reading on, there's Ryan there. Everything I've been studying and reading on is talking about, obviously the Fed has raised the interest rates to slow down the inflation, right? And that has happened. And everybody's calling for a recession, the R word that everybody hates, but it's supposed to be very short-lived from everything I could see. Sorry, Jessica, didn't mean to hide you. It's supposed to be very short-lived and very, very mild, right? So with that, I mean, the interest rates fall with a recession. So I I foresee by 2023 the interest rates being lower, but prices continuing to rise. So if you are going to buy, can you afford to buy it now, or can you, if prices go up 5 or 6%, what is the math? When you can potentially refinance, certainly don't want anybody to get in over their heads, but if they can afford it now, you're not in multiple offers, not as much. You're not throwing it well above list price. Sellers are being a little bit more agreeable, is what I'm seeing too.
Yeah, I think it depends on the sales price in your area, so
Right.
a couple months ago, we were all on this together and talked about we were right on the cusp of interest rates just went up and everything was starting to shift a little bit. And we were all like, I don't know what's happening, but we'll try to talk about it anyway. And now we can have a better picture. So for us, the average sales price or median, however you want to look at it, I like to look at the average here, but it had gone down a little bit. We had a little dip and it was okay, is this a trend? But we're trending right back up to where we were. And really, it hasn't hurt anything, in my opinion, in the long run. And so, and it might have dipped the same time period last year. I don't know. I didn't look at that, but just seeing that. So I want it to keep going up, even if it, so if I buy now, then I'll know in 6 months my house is worth more. So if I pay a little interest rate, like you said, it'd be interesting to see. You would definitely want to compare, the prediction of where it's going versus what you're paying, maybe extra, right, to go ahead and refinance now. Or like we said, look at different financing opportunities if you have to finance and see if there's something better out there for you and your specific need. Because I think there are. I think people we all got a little bit lazy on the research part of that. We just called somebody and said, get me a traditional loan. And now there might be other things to look at,
Yes, I have one more. I have 2 more slides I want to share. So give me just 1 second so I could find it. I just thought it was talking about home price forecast. And this was Freddie, Fannie. It was all the big National Board of Realtors, all the big entities. And everybody is projecting, if not necessarily month to month house prices, but over annually, they're still projected to go up in 2023, which I think, go ahead.
I say, like you said before, or I think we talked about last time, our months, our inventory has literally gone up 100%, but it's still 2.4 months. So we're still in a really strong seller's market. So to me, that means that our sales prices are still going to continue to rise.
That's exactly right. I would agree with that too. What are you seeing, Sia?
So our sales price, from the second quarter to the third quarter, went down a little bit, 5%, but we're still so much higher from last quarter, October 2022. So we have so much room for the market to adjust, right? The housing market needs to adjust to, like you were saying before, Jennifer. So last year we went down 10%. So no, last year we went higher. We went up 10%. That's crazy.
That's
the average is over $1 million, where last year it was 900. Now it's $1,030,000, where it just went down very little.
Yeah, that's exactly right. And that's what everything I've read is, if it goes down, they're talking 1% and short-lived. If you look at it annually, it's still projected to go up. So what about you, Jessica?
The same thing. I mean, I have very similar stats to Sia here. So the market has come up, but it's dropping a little bit. But I think it's going to continue to go up, just at a much slower rate than it has in the past 2 years. The past 2 years were just in a crazy time.
Absolutely. And when I first got into real estate, 15 years ago, I would tell people, you need to stay in house 3 to 5 years to see that appreciation. It's going to appreciate, but it was 1 or 2% a year. So to have 10%, 20% is really unheard of. What we've seen in the past 2 years. Right? Is that what you're saying too? You're nodding, and wait, I need somebody to talk.
Sorry. Yes. Well, it used to be, I think, traditionally over all the years, it's about a 3% average increase year over year. We used to tell people, hey, if you're planning to buy and then sell, quickly, you need to wait 2 to 3 years to just recover the cost of your agent. to break even,
Exactly.
Now I've
Yes.
got people that bought a house a year ago that are condo or whatever in this case, and they're making 15, 20 grand or more, and that's unheard of. It used to be the conversation would be like, hey, how much money do you want to bring to closing? And now it's like, ooh, you're welcome. You still get to move and, get money out of it. Like that was not ever an expectation I've experienced in my, almost 20 years or whatever. So
Yeah, no, I would agree. I would agree with you. What about you guys?
Same
Everybody
thing
agrees?
here. I feel that, we weren't expecting, we used to tell them, hold on to your house at least 2 years, right? You couldn't sell your house. But then like last year was a completely different, I think up to March. And then now it's going back to normal. Everything's going to normalize, I think.
Yeah, I would agree. And I have two more charts, but my other one was talking about and it's hard for me to go back and forth between these, but let me look. I think it was this one.
Well, while you work on that, I'm laughing at Annette, who is commenting on Jessica's awesome hair. Yes.
It's actually not right.
We all said the same thing, Annette. We were like, "Oh, Jess, you look good."
Yeah.
Thank you.
But, yes, it looks really good. But the next slide I have was talk about predictions for until 2026. And I mean, nothing's really predicting it go down. It's like what you said, ending the year off pretty strong from last year. And this is nationally. This isn't my local market. This is nationally, but continuing to rise just at a slower rate, which is what I think you said.
Yeah. So just a little more, normal.
That's exactly right. That's exactly right. But then it goes back to if now is a good time to buy because the prices are going to continue to rise. And if they do continue to rise, can you financially buy it next year? Right?
Yeah.
Or are you going to be priced out? And rent, that was the next slide, but I could wait on it. It just shows the rent, how much it has gone up year after year after year.
Yeah. And they're saying we'll continue to go up pretty dramatically. Yeah.
Yeah, like 22%.
What have y'all heard on when the interest rates might shift? I'm hearing like May, might go down just a little bit more. Is that what y'all have heard?
Yeah, I heard towards the end of the year is everything I'm reading, towards the end of 2023.
Okay.
But it's it just came down. I mean, I think it's as I think it's at 6.1 or 6.2 now. So I mean, it's definitely higher than it was at 3%.
Yes, 3% was crazy. I mean, I think it should probably going to end up back to 4.5, 4.7. That's where we're going to go back to. That 3% was on a normal. Was it? I mean, how long have we seen 4, 5, 6, 7? I've been in the business for a while, and we used to have 8%, right, for residential.
I was going to say, my parents bought, they had 18% was what they had when they bought. Yeah.
Wow.
So we're actually, if you think about it in retro, like in the big picture, we've been very spoiled with these low rates, and 6% is really not excruciatingly high. So.
True.
No, I had an investor told me that, he started buying houses in the 80s and they were double digits. And when it went down to single digits, he was like thought it was a miracle, So you're right. I think historically 6% is a really good rate. Not historically within 5 years, but if you look historically within 20 years, I think the rates are good. But we did get spoiled.
One of my dear friends is a mortgage lender, and she called me freaking out when the rates went up. And she was like, oh my gosh, rates are going up. And I was like, girl, how much was the rate when you bought your first house? 6.25. What's it right now? 6. Can you take a breath? It's going to be okay.
And that's where I think first time home buyers are like, oh my God, interest rates are so high. But I think anybody that has bought several homes through their life, they're like, I'm not really getting a kickback. I mean, they're like, oh, we'll go ahead and do it and we'll refinance when it goes down. Yeah. But it does. I mean, obviously it does change. What?
People are going to refinance anyway. I don't really know or understand what parameters people typically use to determine if they should refinance. So my own clients all the time, like, oh, I refinance. I'm like, you did? I'm like, why? Because it's not always the right thing,
Exactly.
I find it really interesting. I don't know what everyday people use, I guess, the consumers use to determine that. But you really should look harder.
Yeah.
What were you saying, Sia?
I was saying, like, sometimes they have high interest loans that they just refinance. I think a lot of those loans out of the house, it's always cheaper, right? I would think that would be one of the reasons why people that I know refinance, not necessarily to buy another property. It's more to get rid of credit card debt or debt they just can't get rid of, and they're paying it forever. That's what I've seen. But, it works out if you have equity. But if you don't have equity, that'll be when we'll have problem with our market.
Yeah, that's right. I refinanced my old house, and it really wasn't for the interest rate. But what I did is I had so much equity in it that I refinanced it at a 10-year mortgage, and my payment stayed exactly the same. But I got in 10 years it saved me. Of course, I sold it, but it would have saved me $95,000.
See, that's one of the things you should. So I've asked this question 100 times, but I'm always told if it gets your rate down at least a point, and if you're going to stay there 3 to 5 years, otherwise you just spent the money. Just to throw the money, you just spend the money.
That's exactly right. Refinancing it, it's yes, it costs money to do that. What about you, Jessica? So overall, what do you think? Are you telling people? So overall, you're telling people it is a good time to buy, and I think it's very specific to your areas. So I think it's easy to look up national averages, but I think it's important to know it's important to know the national, very important, but it's also important to contact, if you're in Huntsville, to contact Shelby, if you're in Brooklyn, Sia, if you're in Fairfax, Virginia. It's important to get your local representative that knows what is happening in your particular area.
So while none of us have a crystal ball, so if we did, we'd be really rich. So that would be nice.
That's right.
That's what I just say to my clients or, people who are thinking about it on the fence, that we don't know what will happen in the future. Anything could happen. We never knew that 9/11 was going to happen, anything or COVID, like anything can happen. Right. But what we do know is that when you're renting, you are paying 100% interest and you're not getting any equity. So worst case, you buy at the top of the market and you have to wait longer to sell it. That's like the worst case scenario. If you have to move, you can always rent it out. So for every problem, there is a solution. And so that's just what I tell people. Like, you have to think about what's best for you. And I always encourage, buyers to look at rental comps too. So they just kind of have an idea of, if I was going to rent it, what would I be able to get for it today? And just sort of keep those options open. And it's an investment. It's like if you invest in the stock market can go up, it can go down. But if you're in it for the long haul, it doesn't really matter. You're just in it to try to make money over time.
That's right. And I'm pretty sure anybody that you watch and study will say that real estate historically is the best investment you will ever make. It might have a little bit of ebb and flows, but you're right. If you stay in it, it goes up. And I tell people, like, my daughter bought a house 2 years ago, and she, had a hard time figuring out what to do. And I'm like, but how much money have you put in savings? None. Mm-hmm. Okay. So now that you have a house, you're putting a little bit by making those house payments. She has a $200,000 in equity now. In 3 years, she saved $200,000. And if it goes down a little bit, okay, she saved $150,000. It's still more than she would have saved on her own independently.
That was very good timing on her purchase.
It was good timing, but yeah,
very good timing.
Obviously, and most people don't do that in 2 to 3 years. That's really unheard of. But if you look at 5 or 6 years, it's not that unheard of.
Yeah.
And I had a client that has been a really good client for years. And they started off as first-time home buyers and bought, and then they waited 6 or 7 years. And had $50,000, $60,000 in their house and was able, and they had nothing in savings, but they were able to take that equity and use it to, and she's having her second child. So to buy the bigger house with that equity that she, so I think house payments are like savings accounts. You're just putting a little bit in there every single month, and you need a place to live, right? So it's like you said, better than spending $2,000 a month on a mortgage, which, as Jess said, is 100% because you don't see a penny of that.
Mm-hmm.
Yeah, absolutely. Like even here, if you can't afford to buy a home, you have other options. Cooperatives would be my last resort before renting. But even with that, the equity doesn't go up as high. But even like you said, even a couple of dollars every month you're saving, you could rent it out, you can move. As long as you find a cooperative that you could rent out in 2 years, because you don't plan on going anywhere in 2 years. And I think any type of real estate is a good investment because you're using it, you're enjoying it, it's for your comfort. Don't only think about the money that you're spending right now. How many, people keep it at equity in 10 years? It should double.
Yep.
I mean, in New York, right? So I always think it's a good time to buy.
I would agree. So I've never heard of a co-op in buying a house. So what is a co-op?
Cooperative is like shareholders. So you have to get approved by a board. It's a lot cheaper than the condominium. Condominium, you are responsible for everything, where a co-op, your maintenance will include heat, electrics, 24-hour super, but you only get a stock certificate, right? So whatever you want to do, you have to get permission. But in New York, I'm telling you, I'm selling one on the water in Bay Ridge, beautiful sunset views, gorgeous apartments. I mean, if you can't afford to buy, that's definitely a route to go in New York City.
So you're buying like a percentage of it?
A percentage of a building. Like in Manhattan, it could be millions of dollars, the co-ops.
Oh, wow.
You have to have board approval. You have to go through all the processing of what the cooperative, the board wants from you. And there's a management company, but it's very, most of the big, most of the places in Manhattan are either co-ops or condos. More co-ops, I would say.
Wow.
Yeah.
Does anybody else have co-ops?
I'm like,
That's exactly. I was like, I have no idea what she's talking about, but I have no idea.
There are some here, but they're not very common here.
Yeah. And I guess because Sia, you said your average price point was $1 million?
That's in Brooklyn. We're not even talking about Manhattan. That's South Brooklyn's $1 million. Like South Brooklyn's probably the lower end, right? So a co-op here is going to cost you much less than it would in Red Hook, Park Slope, all the, the closer to the city. So here you do cooperative, it's big buildings and you think it's one landlord, but it's not. It's a shareholder building.
Wow. That's an interesting concept.
Yeah.
What is your average price point, Shelby? And I know that we talked about this when we met. When did we meet? Like 6 weeks ago? October. Yeah.
October 1st.
But I don't remember what you told me. What is your average price?
Yeah, we're about $374 right now.
That's high.
So, which has gone up about 100,000 in the last 2.5 years. Yeah. So,
what about you? For I keep looking at the VA and going with Virginia. Sorry, Jess. What about you guys?
Ours is $650.
$650. So you're in the high end too. Yeah, we're at like $400, $420, which has, it was $250 5 years ago. So you can't find anything for $250 anywhere at this point.
Crazy.
Yeah. So, but that goes back to my point about now's the right time to buy, right? Because if you wait 5 or 6 years, well, I could never buy in Brooklyn. Holy cow, let's be clear. But if you wait 5 or 6 years, I mean, the prices are.
Buy co-op.
Yeah, there you go.
Well, I find that interesting because I remember a couple of years ago, I was going to neighbors. I'm like, who the hell would buy this for $1 million, right? And I would be like, they're crazy. And now, you can't even touch that for $1 million. It's just, so we constantly think it's too much, but it just keeps going higher because people want to be homeowners. Even, condos, co-ops are going up. Everything went up here.
Wow. Yeah, that's cool. Well, good. Well, I've always loved seeing you ladies.
Me too.
Thanks.
Yes. And in some, it's a good time to buy.
Yes.
I think so.
And Jess,
For the right people.
That-
I think area specific, and I think it's depending on their situation. I always say the right time to buy or sell is when it makes sense for you.
that's 100%. And I think it's, and I say this every week, but I think it's a great time that if you do want to buy in the next 12 months or sell, you need to call your local professional and figure out what that does look like and go ahead and get everything in line. So if you're waiting for the interest rates to drop, then when they do, you can jump quickly.
I like that.
Well, and like Jason Panos talked about before, when the rates do drop, there's going to be a frenzy, and then you're going to have a whole bunch of competition you wouldn't have had right now. So something another factor.
That is, and that's everything I'm reading 100%, because then the prices are going to go up. Then you're going to have multiple offers. And I mean, it's going to be the feeding frenzy that we saw 6 months ago.
Yeah.
So that's back to what I'm saying. It's super important to go ahead and contact your local professional and figure out what it looks like. And if you can manage it, if it's the right time or when would be the right time.
Yeah.
Well, fabulous.
Awesome.
Well, thank you, ladies.
Thank you. Have a good night. Bye, guys.
Bye. See you soon. Next week.
Yeah, that's right. I'll see you next week. I look forward to it, Shelby.
Bye.
Bye.